Welcome to our video on the history of central bank digital currencies, or CBDCs. You've probably heard the buzz around digital currencies like Bitcoin and Ethereum, but did you know that central banks around the world are working on their own digital currencies? Unlike cryptocurrencies, these are official, state-backed forms of money designed to bring the benefits of digital payments while maintaining the stability of traditional currencies. In today's video, we'll take you through the fascinating evolution of CBDCs, from their early concepts to the real-world trials happening right now. By the end, you'll have a clear understanding of how CBDCs could transform the global financial landscape. What are CBDCs? This segment introduces the concept of central bank digital currencies, CBDCs. It explains that CBDCs are digital forms of a nation's fiat currency, issued and regulated by the central bank. Unlike decentralized cryptocurrencies, such as Bitcoin or Ethereum, CBDCs are backed by the full faith of the issuing government and are centralized under their monetary authority. It highlights that CBDCs serve the same purpose as traditional currencies, such as the US dollar or the euro, but exist solely in digital form. They aim to modernize the money system by leveraging the benefits of digital transactions, such as speed, low transaction costs, and financial inclusion, while retaining the trust and stability of state-backed currencies. Early ideas and the origins of CBDCs. This segment takes us back to the early days when central banks started exploring the concept of digitizing money. Although the idea of CBDCs was not officially considered, the groundwork was laid in the 1980s and 1990s. During this time, digital financial systems like PayPal, Mondex, and Visa Cash were gaining traction. They allowed users to make digital payments or use stored value cards, providing early examples of the digitalization of money. Central banks began to recognize the potential benefits of digital transactions, but focused primarily on regulating these emerging private systems rather than developing their own digital currencies. The segment emphasizes that although digital financial tools were being tested, the idea of a central bank issuing a digital currency remained mostly theoretical. The influence of cryptocurrency. The rise of Bitcoin in 2009 was a pivotal moment for digital currencies. The creation of decentralized cryptocurrencies opened the door to a new type of financial system, one that operated without central bank oversight. While cryptocurrencies like Bitcoin gained a loyal following due to their transparency, decentralized nature, and independence from traditional banking systems, they also raised concerns among governments. Bitcoin's volatility, potential for facilitating illegal transactions, and the risks it posed to national financial stability spurred central banks to reconsider their role in the digital economy. As cryptocurrencies gained popularity, central banks realized that if they didn't innovate, they could lose control of monetary policy and payment systems. This segment discusses how cryptocurrencies, despite their decentralized ideals, acted as a catalyst for central banks to start seriously considering CBDCs as a way to retain control over their financial systems in the digital age. Central bank response and early research, 2010s. In this segment, we discuss how countries like China and Sweden began researching and developing digital currencies in the 2010s. China was one of the first movers. In 2014, the People's Bank of China, PBOC, began researching CBDCs, leading to the creation of the digital yuan. Their goal was to reduce the dominance of physical cash, modernize payment systems, and create a government-backed alternative to cryptocurrencies like Bitcoin. At the same time, Sweden also became a leader in the CBDC space with its e-krona project. Given that Sweden was already moving toward becoming a cashless society, the Swedish central bank, Riksbank, saw the need to develop a digital currency that could work alongside other digital payment methods to ensure financial stability. Other countries began researching CBDCs as well, such as the UK, the European Central Bank, and the US Federal Reserve, though most remained in the exploratory phase during this period. Experiments and pilot projects, 2020s. By the 2020s, the idea of CBDCs shifted from theoretical research to real-world trials. This segment highlights how several countries initiated pilot programs for their digital currencies. China's digital yuan was the most significant of these trials, with large-scale testing in cities across the country. Citizens were able to use the digital yuan for everyday purchases, and the government integrated the currency into the existing financial system, offering an alternative to private payment systems like Alipay and WeChat Pay. The Bahamas also launched its CBDC, known as the Sand Dollar, in 2020. The main objective was to provide access to financial services for residents of remote islands, showing how CBDCs can be used to promote financial inclusion. Benefits and challenges of CBDCs. This segment outlines the major benefits and potential challenges of adopting CBDCs. Benefits: faster and cheaper transactions. CBDCs could reduce transaction costs and speed up cross-border payments. Financial inclusion. Digital currencies could help provide banking services to unbanked or underbanked populations, especially in rural or remote areas. Reduced reliance on cash. CBDCs can provide a government-backed alternative as the use of physical cash continues to decline globally. Enhanced security and transparency. Central bank control ensures stability, reducing fraud and money laundering compared to cryptocurrencies. Challenges. Privacy concerns. CBDCs raise concerns about privacy, as governments would be able to monitor all transactions in real time. Cybersecurity risks. Centralized digital currencies are potentially vulnerable to hacking and cyber attacks. Disruption of banking systems. CBDCs could undermine the role of commercial banks, leading to significant shifts in the traditional banking model. This segment emphasizes that while the benefits are promising, significant challenges remain, particularly around privacy and systemic stability. The future of CBDCs. This final segment explores the future of CBDCs and how they may shape the global financial system. As of 2024, over 100 countries are exploring or piloting CBDCs. International organizations like the IMF and BIS are actively involved in researching how to develop safe and efficient digital currencies that can function across borders. Countries like India, Brazil, and Nigeria are expected to be major players in the next wave of CBDC launches, and many others are not far behind. As these digital currencies gain traction, CBDCs could replace cash as the dominant form of payment in some regions. At the same time, technological advancements in blockchain, cryptography, and secure payments will play a critical role in shaping how CBDCs evolve. Future developments may address some of the current challenges, particularly around privacy, security, and integration with existing financial systems. This segment concludes with the idea that while CBDCs are still in the early stages, they have the potential to redefine money and payments in a way that ensures stability and financial inclusion in a digital economy. CBDCs and geopolitical impact. In this final segment, we explore how CBDCs are not just about modernizing payment systems, but are also likely to reshape global economics and geopolitics. The development of CBDCs has the potential to alter the global balance of financial power. For instance, the digital yuan has raised concerns in the West about China gaining a competitive edge in global finance. With China's early adoption and large-scale trials, it is positioning itself as a leader in the digital currency race, potentially challenging the dominance of the US dollar as the global reserve currency. Additionally, smaller countries, such as the Bahamas and their sand dollar, have shown that CBDCs can empower nations to modernize their economies and reduce dependence on foreign payment systems. These currencies are especially beneficial in regions that struggle with access to financial services, offering a potential tool for boosting financial inclusion and independence. In conclusion, the history of central bank digital currencies, CBDCs, represents a significant evolution in the world of finance and monetary policy. From early experiments in digital currency concepts to the full-fledged research and pilot projects seen today, CBDCs have steadily gained momentum as central banks seek to modernize the way money is issued, managed, and used. As technology continues to transform global economies, the role of CBDCs will likely become more critical, potentially reshaping the future of banking, cross-border transactions, and financial inclusion. If you enjoyed this video and want to stay up to date on the latest developments in the world of digital finance, be sure to like, subscribe, and hit the notification bell. Thanks for watching, and we'll see you in the next one.